So today we're going to play a little game of Would You Rather. Don't worry, I'll keep it clean so the kids can listen as well. But would you rather be a trader that makes $30,000 on a $40,000 account in 1 year with a max drawdown of 35%? Or would you rather be a trader that makes $15,000 on a $100,000 account in that same year with a max drawdown of only 10%? We're going to discuss that and a lot more in today's episode of the Trading Coach Podcast. Ali says, what is your minimum accepted backtesting ROI? I mean, what do you consider to be a good trading system? Well, it depends on, are you talking about for me personally or what I would advise someone? It's a good question because there's going to be a lot of moving pieces in there depending on the situation. And what I mean by situation is this. So there's a massive difference between, obviously on a person-to-person basis, there's a massive difference in what we want to achieve from the market, depending on if we're trading full-time, if we're just looking at it as supplemental income. I think that should probably be obvious. The bigger difference, I would say, is when you're creating a strategy or testing a strategy, what is the intention of this strategy? Meaning, is this the only strategy that you intend on trading, or perhaps the first strategy that you intend on trading, or is it something that is an addition to a portfolio of strategies that you already have, right? So in general, rule of thumb, what I want to do is I want to produce more in the market than what I would get if I were to simply invest in like an index or something like that, right? So if I'm getting less than, let's say 20%, it is not really worth my time because I can probably get 20% on average, maybe not on average, but I can probably get close to 20% just kind of passively investing in like the S&P or something like that. Again, not on average, but you guys get what I'm saying. So I want to achieve more than that. My personal goals is, for a system, I want to see it produce at a minimum about high 20s, 30% at a minimum, right? So I would say 25% would be a 25% return on investment would be the minimum of what I want to see. Obviously, I'd want more than that, but anything under 25% wouldn't be per year wouldn't be worth it for me. Now, it's important to understand that 25%, when I say 25%, guys, does that mean 25% from a single pair? No. Right? It doesn't have to be 25% from a single pair. I'm talking about as a portfolio. So it may take a portfolio of 4 pairs to get 25%. It may take a portfolio of 10 pairs to get 25% or more. So we're looking at it in that aspect. So I'm not necessarily judging it by a single pair's performance, right? I'm judging it by the entirety of the portfolio that I plan on trading. Now, if I'm looking at it as an addition, to, let's say, strategies that I already have, I could be a little bit more lenient, right? So again, I still, if you're anything under 10, 15%, I don't think is really worth it. But if you're in a situation where you already have high performing strategies and you're just looking to kind of add a little bit more to the puzzle, a little bit, add a different piece to the pie, then you can aim for a lower return on investment because your overall return on investment, which is what the main goal is, at least in my opinion, has already reached that threshold of your 25+%, your 30+%, whatever your minimums are. So does that answer your question? I tried to put it from both perspectives, but I want to see 25% plus. So 25% would be a minimum for me to give it any interest. But also keep in mind that return on investment isn't the only thing. It's what's more important than return on investment is how I get that return on investment. I saw it was an interesting tweet the other day, and I don't know. I'm probably not going to be able to bring it up because I don't remember who did it. I think it was my buddy Trader Nick. Let me just see. I don't even know his Trader Nick. Is that going to be something? But he put out, and this kind of gives a good example of the full picture. I don't know if I'm able to find it. But he said this. He said, Which trader's performance is more impressive? Explain your reasoning. Trader A makes $30,000 on his $40,000 account in 1 year with a max drawdown of 35%. Trader B makes $15,000 on her $100,000 account in 1 year with a max drawdown of 10%. So obviously we don't need to dig into the answers to that question. That could be an interesting discussion, by the way. $30,000 on a $40,000 account with a max drawdown of 35%, $15,000 on a $100,000 account with a max drawdown of 10%. So what? The bottom one is what, a 15% return with a max drawdown of 10%. The top one is what, close to 100? What would that be? What would 90% return, something like that? I don't know the math off the top of my head with a 35% drawdown. It's very easy to initially say, hey, I'm going to take the 90% return, right? I actually want to see what that number is. Anybody know what's 30 divided by 40? Where's our math whizzes here? Where's our math whizzes? 75%. There we go, way off. So it's very easy to say, hey, 75% return on investment with a 35% max drawdown is much better than a 15% return with a 10% drawdown. But if you ask 100 traders, and let's say 100 smart traders, educated traders, you're still not going to get the same answer because a lot of it is based on your threshold. And I can take you back to my personal examples. So, well, let me ask you guys this. What would you take in that situation? Again, trader A makes $30,000 on his $40,000 account in 1 year, so 75% return on investment with a max drawdown of 35. Trader B makes a 15% return on investment with a max drawdown of 10. Which one of those intrigues you the most? Which one would you prefer? And of course, if you want to share your opinion on why, that's helpful as well. But what would you guys say in that situation? I'll give you my answer, right? Trader A, for me, 75% return on a 35% max drawdown. If I'm speaking for me personally, me and my money, no one else's money, I'm taking Trader A. Right? And again, we're assuming this is all tested and averaged and blah, 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 all that fun stuff, right? But I'll tell you what, you rewind time to back when I was managing money, and this was the most important lesson that I learned when I was managing money, right? Because when I went into money management, I had a system that was very similar. I didn't produce anywhere near 75% a year, but I was selling them like, hey, I can make a 50% return for you on like a 35% max drawdown. Because I'm thinking like, okay, I was playing around with the money management and the stats. I'm like, I can get this thing up to like 50%. And like, who's not going to want 50%? And funny, when I'm in the building with all these wealthy individuals, none of them cared about my 50% return, which I was shocked, and I didn't know any better, right? All of them were offended, essentially, by a 35% max drawdown. No way. In fact, they said, hey, young fella, come back when you get that in the single digits. So although I'm personally okay, well, I'm in hindsight, I'm personally okay taking a 35% drawdown if I know I'm producing 75%. Right? 30% is my personal max. Like 30% is my max allowable drawdown. So in my actual trading, so I should never hit 30%, but 30% is the number where if I hit 30%, I need to stop. Like that is my threshold. So 35% is above that. But if I know I'm making 75% and I know my numbers, then 75% is an intriguing enough a number for me to add 5 on to that drawdown. But if I'm in a position where I'm managing money, if I'm in a position where, let's say I'm older, I don't really like a 35% max drawdown. If I'm in a position where I'm not necessarily trying to accelerate my wealth but maintain my wealth, a 10% max drawdown is a much safer play And in some situations, the safer play is the better play. So there's no wrong or right answer. But we got to think about this when we talk about our return on investment as well. Because I said the return on investment isn't as important as the number as the story. So you can have a great return on investment, but if it takes a crazy drawdown, and it could be either something that disrupts you financially, like a big max drawdown, or something that disrupts you psychologically, meaning you lose 20 trades in a row, we have to take those kind of variables into account as well. I take the 75% return while trying to grow my account. Maybe later, if I'm trying to protect my account, I would go something on between 35. You can't go in between. That's not the right answer. Which one? 35% or 10%? You can't pick in between. This isn't one of those games, because we'd all pick in between. We'd all pick like a 20% drawdown with a 60% return. You got to pick one or the other. And that's why I really like the question. But yeah, things change, and I'm fortunate enough in how many years I've been trading to experience both sides of this. Where when I first started trading, super aggressive, because I was trying to build wealth, right? I've become a lot more conservative now because I'm in a different position. It's not just monetarily speaking. I'm in a different position in my life where I'm no longer a bachelor out there with no worries. I've got a family. I've got kids. I've got stuff that is important. It's much more important that I maintain my lifestyle, continue to grow, but that I don't kind of go backwards in my lifestyle versus before, where there was nothing to lose. I was trying to achieve a lifestyle, right? Imagine it like a race, right? Like once you're in the middle of the race and I'm already winning and I know the race is won, right? I don't want to take as much risk. I don't need to surge as much as I did in the beginning to kind of get out of the junk. So it's an interesting question, but yeah. So I would like to see, again, a minimum of 25%. Honestly, if it's a standalone strategy, I want to see more than 25%. Let's put it that way. But we'll put about 25% as the minimum of what I want to see from a strategy. But the other variables are important as well. The win percentage, the maximum allowable drawdown, the losing streaks, all of the psychological stuff that will come into play. But always remember that the goal is, when you're developing a strategy, hopefully you're trying to develop a portfolio. So you're trying to put together a handful of pairs to reach that monetary goal. And then bigger picture, even within that portfolio of pairs in that strategy, you're trying to develop a portfolio of strategies, right? So it's like I've been deep diving into the earth and the space and the universe, right? So we have we have our solar system, and our solar system is within a galaxy, right? And that galaxy is one of many galaxies, inside a universe and stuff like that. So we have our trading strategy and our single pair that we're trading, and then we try to have multiple pairs around that strategy, and then we try to have multiple strategies in our bigger trading portfolio, and each of the multiple strategies contain multiple pairs, and it's that's how everything kind of keeps working on all cylinders. So good stuff right there. Good way to kick off the year. Good conversation. See if we can make that a podcast episode as well, if I remember. So today's discussion came from one of our live trading room sessions. And if you ever want to join, feel free. We have a London session and a New York session, both starting at 7:30 a.m., 7:30 a.m. UK time, and 7:30 a.m. New York time. It's part of your risk-free trial membership. Just head over to www.tier1trading.com. Find the button that says Start My Trial Membership. Sign up, get on the platform, check out some courses, talk to the community, and of course, join us for our live sessions like the New York and London live trading room. See you there.